Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 139, recorded here on October 27th, 2024. This podcast is for entertainment only and is not investing advice, so as always, please do your own homework. All right, we'll get into the market update, outlook, and weekly top Bitcoin news, and then highlight this week's Substack post, and then finish with the weekly top boost on Fountain. Wall Street saw a volatile week, one in which the performance of all three major averages differed significantly from each other. The benchmark S&P 500 halted its longest weekly win streak of the year, a span which took its number of record closes for 2024 to 47. Meanwhile, the blue chip Dow slumped for the week, weighed down by disappointing quarterly results and negative updates from its constituents. Conversely, the Nasdaq Composite extended its weekly win streak to 7 and took out a new record intraday high after 74 trading days. The S&P and Dow were dragged down by disappointing quarterly performances from industrial giants such as GE Aerospace, 3M, Honeywell, and Boeing, and a slide in McDonald's due to the fast food giant being linked to an E. coli outbreak. Additionally, a bond sell-off driven by a recalibration of Federal Reserve rate cut expectations also put pressure on equities. The Nasdaq, on the other hand, got a boost from Tesla. The electric vehicle giant ended up being a headline maker after posting one of its strongest quarterly reports in a while and projecting as much as 30% deliveries growth in 2025. The stock soared to its best day in over a decade, adding more to its market cap than the combined valuations of General Motors and Ford. And the shorts got wrecked. The earnings season shifts into top gear next week, with investors receiving financial figures from 5 of the Magnificent 7 firms. That represents $12 trillion in market cap, or 23.2% of the S&P 500 alone, as per Deutsche Bank. For the week, the S&P 500 slipped 1% and the Dow slid 2.7%, while the Nasdaq Composite gained 0.2%. Looking ahead, Wall Street will see an extremely busy week ahead as investors will receive key data on economic growth, inflation, and the labor market. Moreover, the earnings season will shift into top gear with no less than 5 members of the Magnificent 7 Club scheduled to report their results. Those 5 companies, Apple, Microsoft, Amazon, Alphabet, and Meta Platforms, again, $12 trillion in market cap, 23.2% of the S&P 500 alone. Other big names reporting results include Ford Motor, McDonald's, Pfizer, Eli Lilly, Caterpillar, Starbucks, MasterCard, Merck, Uber Technologies, Comcast, ExxonMobil, and Chevron. The economic calendar will see the advance estimate of U.S. Q3 GDP on Wednesday, followed by a reading on the Federal Reserve's favorite inflation gauge, the Personal Consumption Expenditures Price Index, on Thursday, if you believe that kind of information. Finally, the October jobs report will come out on Friday, also if you believe it. Those key indicators will come ahead of a pivotal first week of November, which will see the culmination of the 2024 presidential election and the Fed's second penultimate Monetary Policy Committee meeting of the year. According to the CME FedWatch tool, around 95% of market participants expect the Federal Open Market Committee to cut its benchmark lending rate by 25 basis points in November, while about 5% expect no change. And there is no policy committee for Bitcoin, just a reminder. Next up, good morning, Bitcoin. This is from Friday, October 25th, 2024, from No BS Bitcoin. Here's what's happening. FinCEN says Hezbollah does not use cryptocurrencies at scale to finance its operations. FinCEN has issued an alert to address Hezbollah financing within the U.S. financial system. The alert reveals that the group prefers traditional financial methods such as bulk cash transfers and smuggling, rather than using cryptocurrencies, reports The Rage. Huh, how about that? Nayib Bukele donates 2 Bitcoin to support construction of schools in Honduras. The National Bitcoin Office of El Salvador confirmed that the funds came from the Salvadoran president's personal wallet. Well, that's very nice of him. TerraWolf aims to raise $425 million via convertible note offering. The company said it plans to use $115 million of the proceeds for share buybacks after disciplined capital expenditures aimed at supporting organic growth in HPC AI and evaluating strategic opportunities such as potential site acquisitions, reports the Miner Mag. Oh, another solo miner finds a block. Block 867188 has been solved by a solo miner with 150 petahash per second, said CK Pool Dev. The miner reaped 3.329 Bitcoin worth $222,000 in rewards. Hackers may have drained $20 million from a U.S. government-linked wallet. Blockchain surveillance firm Arkham Intelligence announced that over $20 million worth of stablecoins and Ethereum from 9 separate seizure addresses linked to the Bitfinex hackers have been sent to suspicious addresses linked to a money laundering service. We'll get into this one a little bit later, but Pennsylvania passes a Bitcoin rights bill. The Pennsylvania House of Representatives has passed HB 2481, which establishes a regulatory framework protecting the self-custody of Bitcoin and Bitcoin payments. The bill exempts Bitcoin from additional taxes and affirms the right to run nodes. It received strong bipartisan support, passing with 176 votes in favor and 26 against. The bill now awaits approval from the Pennsylvania Senate and the signature of Governor Josh Shapiro to become law, reports BTC Times. Microsoft to consider Bitcoin as a hedge against inflation. The company's SEC filing reveals a proposal for exploring Bitcoin as an inflation hedge at the next shareholder meeting. The board advises voting against it, of course, citing existing considerations of the issue. Stalker raises $7.98 million to establish corporate Bitcoin treasury. Stalker's latest funding round, led by Fulgur Ventures, raised 100 Bitcoin, or $6.78 million, and 1.2 million euros in cash, totaling 7.4 million euros, or $7.98 million. The company announced plans to expand its Bitcoin treasury following MicroStrategy's approach. The company also said it aims to launch Bitcoin-based tokenized assets and develop infrastructure to streamline institutional tokenization using native Bitcoin Layer 2 technologies like the Liquid Network. Dutch tax authority seeks feedback on draft bill for crypto firms to report user data. The country's tax authority seeks public feedback on its plans to mandate crypto firms to report clients' transaction data to comply with EU's rules. The draft bill is expected to be submitted to the House of Representatives in the second quarter of 2025. Adopting Bitcoin El Salvador 2024 will take place on November 15th and 16th. You can get your tickets here, and there's a link in the article. And that about wraps it up. Moving on to Hodler's Digest for October 20th to 26th from Cointelegraph. And we'll get into this one a little bit more. Canadian cryptographer later. Canadian cryptographer and computer scientist Peter Todd says he's been forced into hiding for fear of his safety after an HBO documentary alleged he was the inventor of Bitcoin. The film, dubbed Money Electric: The Bitcoin Mystery, aired on October 9th and claimed to finally reveal the mystery surrounding the true identity of Satoshi Nakamoto, the pseudonym of a person thought to be the inventor of Bitcoin. Ultimately, after exploring other potential candidates, the documentary ended on a dubious note with Todd stating, "Well, yeah, I'm Satoshi Nakamoto." Todd has repeatedly denied that he's Satoshi Nakamoto and dismissed the film's claims. According to a recent interview with Wired, he's been forced into hiding over fears for his safety. He says filmmaker Colin Hoback, the documentary's director, used specious evidence to support the documentary's erroneous conclusion. However, according to several sources and footage shown in the documentary itself, Todd evidently has a history of jokingly stating, "I'm Satoshi." These statements appear to have been made in the vein of the famous line, "I am Spartacus," from the eponymous film Spartacus. In the 1960 film, a group of warriors are captured by Roman soldiers and offered mercy if they'll identify and send forth the man known as Spartacus. In response, the warriors each claim in turn to be Spartacus as a sign of solidarity. Microsoft shareholders are set to vote in December on whether the tech giant should publicly assess adding Bitcoin to its balance sheet, a filing with the United States Securities Exchange Commission reveals. In the October 24th filing, Microsoft disclosed that a proposal titled Assessment of Investing in Bitcoin will be voted on by certain shareholders in a December 10th meeting. Still, the Microsoft board recommends voting against it because they already evaluate a wide range of investable assets, including Bitcoin. The National Center for Public Policy Research pushed the proposal, which highlighted business intelligence firm MicroStrategy's Bitcoin investment strategy and noted that it has outperformed Microsoft by over 300% this year, despite doing a fraction of the business of Microsoft. It also said that institutional and corporate adoption is becoming more commonplace through spot Bitcoin exchange-traded funds. Additionally, the research firm noted that Bitcoin remains volatile but could serve as a hedge against inflation and corporate bond yields. At minimum, companies should evaluate the benefits of holding some, even just 1% of its assets in Bitcoin, it said. Eric Council Jr., the individual charged over his involvement in allegedly hacking the United States Securities and Exchange Commission's X account and posting a message suggesting that Bitcoin exchange-traded funds had been approved, has pleaded not guilty in a D.C. courtroom in an October 25th arraignment before Judge Amy Berman Jackson in the U.S. District Court for the District of Columbia. Counsel Jr. entered a plea of not guilty for one charge of conspiracy to commit aggravated identity theft and access device fraud. He was allegedly part of a group that hacked the SEC's X account in January, publishing a post that claimed the commission had officially approved spot Bitcoin ETFs for the first time. Officials with the Federal Bureau of Investigation arrested Counsel Jr. in Alabama on October 17th. According to Bloomberg, prosecutors intended to extend a plea to Counsel Jr. It's unclear if U.S. authorities also intend to execute additional arrest warrants for individuals involved in the SEC breach. According to U.S. authorities, the group of which Counsel Jr. was allegedly a part took control of the SEC's X account through a SIM swap attack, X's safety team reported, with the SEC later confirming that the Commission's account did not have two-factor authentication enabled, leading to the breach. The malicious actor who drained the United States government wallet of approximately $20 million on October 24th, containing seized funds from the 2016 Bitfinex hack, returned $19.3 million to the government wallet less than 24 hours later. According to Arkham Intelligence, several wallets controlled by the hacker returned the funds to the U.S. government wallet beginning with the characters 0xC9E. At the time of this writing, roughly 88% of the funds have been returned. On-chain data shows that the hacker returned approximately 2,412 Ether and $13.2 million in Aave staked USDC. Independent blockchain investigator Zach XBT noted that the return funds do not include approximately $700,000 the hacker sent to instant exchanges. The identity of the hacker and the motivation behind the attack are not currently known, but the incident reflects a growing trend of hacks and exploits in the third quarter of 2024. A homeowner's attempt to sue his insurer for failing to cover his $170,000 loss to a crypto scam was rejected by a United States appeals court, with a three-judge panel ruling that there was no error in dismissing his case. The Fourth Circuit Appeals Court ruled on October 24th that a Virginia district court judge was correct in ruling that Ali Sedagapur had no breach of contract claim against Lemonade Insurance because his homeowner's policy only covered direct physical loss of property. Sedagapur sued Lemonade Insurance in 2022, claiming the insurer should have covered him under the policy for $170,000 in crypto stolen from him in a scam. The suit was a rare case of a crypto user attempting to claim that crypto is personal property under a home insurance policy and legally force an insurer to cover scam crypto losses. The appellate judges said that under Virginia law, direct physical loss requires present or impending material destruction or material harm, they added. Because the digital theft of digital currency does not amount to a direct physical loss, no coverage for Singapur's loss of cryptocurrency is available under that section. Prediction of the week, Bitcoin is in the initial stages of a bull run, and a $100,000 Bitcoin price may come within 3 months. In his latest market analysis on October 24th, network economist Timothy Peterson said that ignition has already come for a new Bitcoin rally. Bitcoin has spent nearly 8 months consolidating after its all-time high of 73,800 in March. For Peterson, however, the real gains are yet to come and may even see Bitcoin US dollar hit 6 figures for the first time in the next 3 months. Bitcoin's current run is not meaningfully different than the prior price paths, he wrote on X. This puts a big dent in the diminishing marginal returns argument. An accompanying chart compared Bitcoin price performance since its last macro low in late 2022 to previous cycles, with Peterson dismissing the idea that Bitcoin investors see lower comparative returns each cycle. A move just above trend puts Bitcoin at 100,000 within 90 days, completely within reason, he said. And we shall see. In FUD of the week, 5 people were sentenced to prison for their roles in a $21.6 million crypto fraud, in which they reportedly spent the stolen funds on a Shark Tank, private jet rides, sex workers, and a luxury car. The criminals raked in $21.6 million, or 20 million euros, from about 40,000 investors through multiple investment schemes, including the EXW wallet and the EXW crypto token, Austrian news outlet Hoot reported on October 23rd. 2 of the defendants were sentenced to 5 years, 2 received 30 months, and 1 got 18 months of prison time. 5 others were acquitted, while some have continued to hide from authorities. The fraud trial at the Klagenfurt Regional Court was the largest in Austrian history, Hoot noted. Judge Claudia Bandian-Ortner handed down the sentences on October 23rd after 2 months of trial and 300 hours of negotiations. Hoot said that the fraudsters lived like they were in a, quote, Hollywood film, partying in some of Dubai's poshest clubs and traveling between cities in private jets. They even bought a Shark Tank and a villa, which news and review site behind MLM reported was located in Bali. The hacker behind the recent theft from decentralized finance protocol Radiant Capital has moved almost all of the stolen funds from Layer 2 protocols to Ethereum in a possible move toward obscuring its location. In October 24th, blockchain security firm PeckShield reported that addresses linked to the Radiant Capital exploiter have bridged nearly all of the ill-gotten crypto from the exploit from Layer 2 network Arbitrum and the Binance BNB chain to the Ethereum network. The total amount moved was about 20,500 Ether, worth around $52 million, PeckShield noted. On October 23rd, Radiant Capital reminded users to secure their wallets by revoking approvals to affected smart contracts. Failing to do so puts your funds at risk of being drained, it warned. The cross-chain DeFi lending protocol halted its lending markets after it was exploited for more than $50 million in the cybersecurity breach on October 16th. Don't shitcoin, folks! Don't shitcoin, just buy Bitcoin, put it in cold storage, and forget about it. Lazarus Group exploited Chrome vulnerability with fake NFT game. Well, this is fun. The North Korean hacker collective Lazarus Group used a fake blockchain-based game to exploit a zero-day vulnerability in Google's Chrome browser and install spyware that stole wallet credentials. Kaspersky Lab analysts noticed the exploit in May and reported it to Google, which is fixed. The hackers' play-to-earn multiplayer online battle arena game was fully playable and had been promoted on LinkedIn and X. The game was called D-Tank Zone or D-Tank War and used non-fungible tokens as tanks in a worldwide competition. Users were infected with spyware from the website even if they did not download the game. The hackers modeled the game on the existing DeFi Tankland. The hackers used malware called Manuscript, followed by a previously unknown type confusion bug in the V8 JavaScript engine. It was the seventh zero-day vulnerability found in Chrome in 2024 through mid-May. Kaspersky principal security expert Boris Larin said, "The significant effort invested in this campaign suggests they had ambitious plans, and the actual impact could be much broader, potentially affecting users and businesses worldwide." Wow, the Lazarus Group. Got to watch out for those guys. Well, don't play fake blockchain-based games, I guess. Be careful what you download. Moving on, this is from Bitcoin.com News. BRICS leaders push for local currency network, diminishing US dollar role. At the 16th BRICS Summit in Kazan, Russia, BRICS leaders underscored their commitment to advancing a more integrated financial system across member countries with a focus on local currency transactions and cross-border payment structures. We iterate our commitment to enhancing financial cooperation within BRICS. We recognize the widespread benefits of faster, low-cost, more efficient, transparent, safe, and inclusive cross-border payment instruments built upon the principle of minimizing trade barriers and non-discriminatory access, the declaration released on Thursday details. Adding, "We welcome the use of local currencies in financial transactions between BRICS countries and their trading partners. We encourage strengthening of correspondent banking networks within BRICS and enabling settlements in local currencies in line with BRICS Cross-Border Payments Initiative, which is voluntary and non-binding, and look forward to further discussions in this area, including in the BRICS Payment Task Force," the declaration continues. The new development bank was highlighted as a pivotal entity in supporting infrastructure and sustainable development. "We recognize the key role of the new development bank in promoting infrastructure and sustainable development of its member countries," BRICS leaders stated, expressing support for the NDB and continuously expanding local currency financing and strengthening innovation in investment and financing tools. With the NDB General Strategy for 2022 to 2026 underway, the leaders affirmed a need for strengthened corporate governance within the bank to meet evolving financial demands across the BRICS network. BRICS leaders also welcomed the role of the Interbank Cooperation Mechanism, noting, "We welcome the BRICS Interbank Cooperation Mechanism focus on facilitating and expanding innovative financial practices and approaches for projects and programs, including finding acceptable mechanisms of financing in local currencies." Additionally, they stated, "We task our finance ministers and central bank governors as appropriate to continue consideration of the issue of local currencies, payment instruments, and platforms and report back to us by the next presidency." This emphasis on collaborative financial structures underscores BRICS' ambitions for a resilient, interconnected financial network that supports the growth and stability of emerging markets. Next up, from Cointelegraph, the case for Bitcoin as a reserve asset, from the Bitcoin Policy Institute. A recent paper from the Bitcoin Policy Institute titled "The Case for Bitcoin as a Reserve Asset" argued that the central banks should adopt Bitcoin as a reserve asset to hedge against rising inflation, geopolitical risks, capital control risks, sovereign default, bank failures, and international sanctions imposed by the United States government. Economist Matthew Ferranti, the paper's author, made a case that Bitcoin is an effective portfolio diversifier due to a weak correlation between the decentralized asset and other financial instruments. The economist also highlighted Bitcoin's lack of counterparty risk as an effective hedge against sovereign defaults, including the risk of financial sanctions, which Ferranti labeled as a form of selective default, impacting nations like Venezuela and Russia. Ferranti clarified that Bitcoin and gold allocations might not be the answer for every central bank. However, the nascent digital asset serves the same store of value and hedging properties as gold, particularly against rapid currency depreciation. The Bitcoin Policy Institute's paper echoed calls from presidential candidates and U.S. lawmakers to establish Bitcoin as a strategic reserve asset of the United States Treasury Department. Following former President Trump's keynote address at the Bitcoin 2024 conference in Nashville, Tennessee, Wyoming Senator Cynthia Lummis introduced this Bitcoin Strategic Reserve Bill in the U.S. Senate. The bill sets the ambitious goal of acquiring 5% of Bitcoin's total supply over time. In an interview with Maria Bartiromo of Fox News, Trump hinted at paying the national debt with Bitcoin, a nod to the supply-capped asset's power to absorb and transmute currency inflation into economic prosperity. MicroStrategy CEO and Bitcoin thought leader Michael Saylor praised the Bitcoin Strategic Reserve Initiative as the 21st century equivalent of the Louisiana Purchase. For context, former U.S. President and Founding Father Thomas Jefferson purchased the Louisiana territories from France for $15 million in 1803, doubling the geographic area of the United States at the time. Despite the popularity of the strategic reserve idea among Bitcoin holders, not everyone is on board with the effort. Cardano founder Charles Hoskinson previously argued that while the adoption of Bitcoin as a strategic reserve asset would boost the price of Bitcoin, it would also allow state actors to influence the Bitcoin network. Huh? I don't know about that. Ownership isn't the same as control, but it's okay. He's Cardano. Shitcoin. Next up, from Bitcoin Magazine, the metric that matters for the Lightning Network. The Lightning Network is a revolutionary scaling solution for Bitcoin, enabling fast and inexpensive payments that make everyday transactions with Bitcoin possible. As the network grows, it's essential to measure its health and efficiency accurately so we can unlock its full potential. Traditional metrics like node count, channel count, and capacity have been used to assess the Lightning Network, but they only tell part of the story. To truly understand the performance of the second layer solution, we need to focus on flow, specifically max flow, a metric with a long history of optimizing complex systems. Max flow is a powerful metric that calculates how much value can theoretically flow through a network, considering constraints like channel capacity and liquidity. It's an essential tool for evaluating network effectiveness and reliability, particularly in systems where smooth, uninterrupted flow is the key to success. Max flow has been used for decades in industries ranging from telecommunications to logistics. It's already been applied to solve problems in telecom networks. Max flow helps allocate bandwidth efficiently, ensuring that data flows seamlessly across the internet. Supply chains. Companies use max flow algorithms to optimize the movement of goods across their global distribution networks, reducing delays and maximizing efficiency. Transportation systems. Cities apply max flow to traffic management, ensuring that vehicles move smoothly across road networks by optimizing flow through intersections. These examples showcase how max flow improves efficiency in complex systems where resources need to move quickly and efficiently. Now it's being applied to the Lightning Network, as seen in new data science research from Renee Pickart about feasible Lightning payments. Applying max flow to the Lightning Network will help ensure that Bitcoin can flow smoothly between users, even as the network scales. Max flow isn't about measuring the actual movement of value, but rather about understanding the probability of feasible payments across the network. By focusing on max flow, we gain a more accurate understanding of the Lightning Network's true health. Instead of just counting channels or capacity, max flow shows us the likelihood of payment success, allowing node operators to optimize their liquidity and improve overall performance of the network. Metrics like node count, channel count, and capacity provide a snapshot of the Lightning Network's infrastructure, but much like counting the number of roads or intersections in a city, these numbers don't tell us how well traffic is flowing. In the case of the Lightning Network, what really matters is how efficiently Bitcoin can be routed through the system. Critics who focus solely on these traditional metrics often draw limited conclusions about the network's performance. While it's important to know the size of the infrastructure, it's far more valuable to understand the probability of successful payments. Max flow offers that deeper insight. By measuring the success probability of payments, it helps to see where liquidity is well distributed and where bottlenecks might be forming. This enables operators to make data-driven decisions that improve the network's performance and ensure that payments are routed reliably. The Lightning Network is designed to scale with Bitcoin, offering fast and cheap transactions without overloading the Bitcoin blockchain. As Bitcoin's price appreciates, the network's capacity to handle larger payments grows naturally. For example, If a channel holds 0.1 Bitcoin and Bitcoin is priced at 50,000, that channel can route a $5,000 payment. If Bitcoin's price doubles to 100,000, that same channel can handle $10,000 without any changes to the underlying infrastructure. As the Bitcoin digital economy grows, so too will the capabilities of the Lightning Network. Bitcoin price increases coupled with data-driven changes to the Lightning Network will help expand the capabilities of Lightning. Max flow plays a critical role here, helping to measure the success of probability of payments as the network scales. It provides an essential tool for monitoring payment reliability and ensuring that the network remains efficient as demand for Bitcoin transactions grows. Max flow is the next generation metric that will help drive Lightning Network forward by moving beyond superficial statistics like capacity or node count. It offers node operators and investors a more accurate picture of the network's performance. This in turn helps them make smarter decisions about liquidity allocation and payment routing. For investors, MaxFlow offers a more reliable measure of network health, revealing the underlying potential of the Lightning Network. Those who focus on MaxFlow will gain deeper insights into the scalability and efficiency of Lightning, positioning themselves to capitalize on future growth. For node operators, understanding MaxFlow means being able to optimize their channels for better performance. It helps them manage liquidity more effectively, ensuring that payments flow reliably and improving the user experience for those interacting with the network. As the Lightning Network evolves, MaxFlow will be essential to its health and performance, while traditional metrics like node count and channel capacity offer a limited view of the network. MaxFlow reveals how efficiently value can move through the system, a critical insight as Bitcoin grows and the demand for reliable payment increases. MaxFlow is more than just a new way to measure the network. It's the key to unlocking the Lightning Network's full potential. By focusing on the metrics that matter, node operators and investors can help the network scale smarter, ensuring that Bitcoin's role in the global economy continues to expand. And I have to say, this is quite a fascinating article. And again, there's a link in the show notes, and there's also some nice charts in here that you might want to check out later on. Next up, from Decrypt, Peter Todd says he isn't in hiding after being fingered as Satoshi Nakamoto, but he's taking security measures. So we talked about this a little bit earlier. Let's see what more details we have on this one. It's been an eventful month for longtime Bitcoin Core developer Peter Todd, who was recently accused of being pseudonymous Bitcoin creator Satoshi Nakamoto in a new HBO documentary. Despite vigorously denying the claims both on camera and off, Todd told Decrypt on Friday that being publicly branded as the elusive genius sitting on $74.4 billion worth of Bitcoin has forced him to go even further to defend himself. I've taken some security measures, Todd said, but it's not a good idea to say exactly what I've done publicly. Best to keep the bad guys guessing. The early Bitcoin contributor added, however, that he is certainly not in hiding, nor has he been in a recent Wired story suggested. In fact, Todd attended a Bitcoin conference in Lugano, Switzerland, where a statue in honor of Nakamoto was unveiled today, and says he plans to speak at 5 more events around the world in the coming weeks. All in all, perhaps surprisingly, Todd said he hasn't yet been spotted or badgered in public by anyone who's recognized him from the HBO documentary in which he appears, Money Electric, The Bitcoin Mystery. One thing that probably helped was refusing to do any audio-video interviews with me, with any of the many journalists who asked me to, Todd said via email. Todd is, it should be noted, no stranger to public scrutiny, though this is certainly the most attention he's ever received as a potential Satoshi candidate. The blockchain developer was involved with Bitcoin from its infancy and has been previously floated as potentially responsible for secretly creating the world's first cryptocurrency. Colin Hoback, the director of Money Electric, argued in his film that several pieces of circumstantial evidence pointed to Todd's identity as Satoshi, including alleged similarities between both individuals' writing styles. Hoback asserted that Todd's experiments as a teenager with the concept of digital currency were especially suspicious, as was a blog post Todd authored that Hoback claims was accidentally made on the wrong account and should have been posted by Satoshi. Many in the crypto community, however, weren't convinced by those arguments. When Todd was presented with them by Hoback at the climax of the documentary, he immediately dismissed them as ludicrous. After Todd deflected claims that he was in hiding this week, Hoback took to Twitter to argue that even that assertion revealed the developer's hidden Machiavellian scheming. Peter Todd tells Wired he's gone into hiding, Hoback posted. Then he mocks Wired for running with this narrative, making an appearance today on stage. As its author deftly wrote, Hoback continued, quoting the Wired piece, just as Todd's trolling insulates him, it also exposes him. Just leave the poor man alone. Next up, from CoinDesk, this was posted on October 25th. Crypto rally foiled by report of DOJ probe of Tether. Cryptocurrency prices have reversed early gains and are broadly lower during U.S. afternoon hours on Friday following a Wall Street Journal report that the U.S. is probing stablecoin issuer Tether for violations of sanctions and anti-money laundering rules. Where have I heard this before? Stablecoins are a type of cryptocurrency whose value is pegged to another asset, typically the US dollar. With a market cap in excess of $120 billion, Tether is by far the most widely used stablecoin. Earlier in the session, crypto prices had been on the rise, with Bitcoin nearing the $69,000 level, and perhaps readying for a late day or weekend challenge of topping $70,000 for the first time in 3 months. In the minutes following the news on Tether, Bitcoin had tumbled to as low as $66,500, down nearly 2% over the past 24 hours, before modestly bouncing back to $66,800. The broader market gauge CoinDesk 20 index was lower by 2.3% over the same time frame. Taking to X shortly following the story, Tether Chief Technology Officer Paolo Ardoino said the Wall Street Journal is regurgitating old noise. There's no indication, said Ardoino, that Tether is under investigation. Interesting. Well, basically, Tether is like a bank, but they have like hardly any employees and they make a lot of money and they're not regulated by the United States, and yet they're using United States securities. So it's probably just a matter of time before they get brought into the Federal Reserve family. And that means they'll probably get taken over by a bank or they'll be outlawed in the United States, something like that. So that will be interesting to watch. And finally, a little more detail on that article on Pennsylvania House advancing the Bitcoin rights bill. Again, as we mentioned earlier, the Pennsylvania House of Representatives passed the bill on October 24th. It's called the Bitcoin Rights Bill. Bipartisan support, 176 to 26, including all 100 Republicans and 76 Democrats. According to Fox Business Report, the legislation seeks to protect the rights of Pennsylvania residents to hold and use Bitcoin while establishing clear guidelines on taxing digital asset transactions. The bill now moves to the Republican-led Pennsylvania Senate, which is expected to review it after the November elections. If approved and signed by Governor Josh Shapiro, Pennsylvania will join other states in establishing its digital asset rules amid federal regulatory uncertainty. House Bill 2481 was developed with input from the Bitcoin advocacy organization Satoshi Action Fund. The SAF has been involved in similar efforts in 20 states, with 4 bills becoming law in Oklahoma, Louisiana, Montana, and Arkansas. The push for new legislation in the area comes amid federal uncertainty about digital asset regulation, with agencies divided on oversight. The Securities and Exchange Commission continues to evaluate whether certain digital assets, apart from Bitcoin and Ethereum, qualify as securities. Meanwhile, the Commodity Futures Trading Commission oversees those classified as commodities. In such polarizing times, it's great to see both sides of the aisle come together to further innovation and prioritize security for Pennsylvanians who own and transact with cryptocurrency, said Republican Pennsylvania State Representative Mike Cabell, the bill's sponsor. With approximately 1.5 million residents, around 12% of the state's population now holding digital assets, Pennsylvania has emerged as a pivotal in the national debate over cryptocurrency regulation. The timing of the bill's passage could also have implications for the state's upcoming elections, as both parties are focused on the growing influence of crypto-friendly voters. Lawmakers believe that clear policies on digital assets would sway voters in the Senate race between incumbent Democrat Bob Casey and Republican challenger Dave McCormick. With the bill already passed in the Pennsylvania House and poised to pass the Senate, it stands as a pivotal issue for candidates and voters, said SAF founder Dennis Porter. He added that digital asset owners represent a growing voter bloc. Additionally, crypto-friendly policies are gaining attention as the presidential race heats up between Democrat Kamala Harris and Republican Donald Trump. Finally, wanted to mention this week's featured post on Bitcoin Fortress Substack. Article is entitled SHA-256 Encryption, the backbone of Bitcoin's security. So check that out. There's a link in the show notes. If you like the publication, please subscribe. It's free. And if you really like it, you can be a paid subscriber and help me keep the lights on. Finally, a weekly top boost on Fountain at God's Death with 536 sats. Thank you, sir. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com, and you can follow me on Nostr. I am Nostr only. No more social media for me, just Nostr. And with that, I will talk to y'all next week. Bye-bye.